continued concerns about those tech stock valuations. It all happens as we have an IPO pipeline that's really quite extraordinary. Elon Musk is preparing for what can now officially be called the largest IPO in history, SpaceX. Last night we gave you the price. Well, it's $135 a share. 555 million shares are going to be sold, and that puts the value of the company at $1.7 trillion. A report from Morningstar questions that number. Its analysts say Elon Musk's company is probably worth closer to 800 billion, which is still quite a lot, but not the largest in that sense. SpaceX is one of just a few highly anticipated. You've got OpenAI, you've got Anthropic, you've got SpaceX. Kristina Hooper is the chief market strategist at Man Group. Good to see you. Let's deal first of all with the valuations. I'm bearing in mind what Lisa was just saying. The valuations are, they have divorced from reality of future earnings streams because that is so uncertain. So is this an accident waiting to happen?
Richard, I think you hit the nail on the head. It absolutely is. Think of this as a form of faith-based investing. You have many just assuming that the earnings forecasts today are what we will actually see, when there are a variety of potential obstacles that could actually slow AI CapEx. And so I do think that markets are overly optimistic. Right. Investors are overly optimistic. It doesn't mean that AI isn't going to be transformational. Sure. It doesn't mean that this isn't another industrial revolution, but we are at a place where valuations are so high. Stocks are, in many cases, priced to perfection when it comes to anything related to AI. And I do believe we could easily be disappointed.
Right, but the point about stock prices is that they correct over time. Whether it be in the short or the medium, if you're pricing to perfection over time, the market will price to reality rather than just mere expectation. And what I don't understand is why rational, hard-nosed analysts and investors are giving so much leeway. That's really what's the trouble here. It's not that a few companies are a bit frothy. It's analysts are sort of going along with, they've drunk the Kool-Aid.
Well, I would argue that analysts are basing this on what they've seen thus far, which has been a dramatic ramp up in spending. But I do think we're going to get to a point where that spending slows, and it could come from a variety of different places. We could, for example, see hyperscalers have difficulty getting financing or not having the interest or the will to spend as much as they have spent. We could see, for example, supply chain disruptions that slow AI CapEx. So a variety of drivers could push spending lower in this space.
But you see, you're focusing on CapEx spending being the driver. Unless there is a consummate CapEx spending into profitability, all you've got is basically a negative side of the balance sheet. You're spending, but you haven't got the revenues. At what point do you need to see that CapEx producing larger profits?
We're getting much closer to where we're going to need to see it, but we won't know exactly what that point is until we see a market reaction. That's the reality. Valuations are rarely predictive in the shorter term, but they can be sometimes, and we have to be aware of that. And you mentioned seeing a price adjustment over time, but Richard, it could happen rather quickly. And in fact, the ECB in its financial stability review warned of a potential sharp adjustment because prices are so high. And I do think we have to factor in that potential.
Central banks, I'm glad you mentioned the ECB. Central banks on both sides of the Atlantic are doing quite a lot of work, not just stress testing, but also understanding, because Mag 7 is such a huge part of the market, AI is so dominant in terms of investing strategy. If it turns turtle, as they say, then central banks could find their national economies in very, very tricky waters.
Oh, absolutely. Central banks aren't just worried about growth and inflation, they
Sure.
worry about stability. That includes market stability. And so, of course, they have to be concerned with this.
I just keep looking at these companies that are going to IPO. The three biggies, Anthropic, Open, and SpaceX. The market will find the money for them, to be sure. And there's also, I was reading, a very interesting investment strategy where people are investing into the companies that they know have invested into those three big companies. So if you can't get directly to it, you're going to go via those companies that are already well and truly up to their eyeballs in it.
Yes, this feels very much like much of what we saw during the tech bubble, the late 1990s, the early 2000s. There is a reason for positive sentiment, but there may not be as compelling a rationale for this level of exuberance. And of course,
Right.
it has with it significant risks.
Kristina, when you get the memo that tells you what day that the market's going to turn, do pass it on, please. Do sort of tell
You're
the
my
rest of
first
us.
call, Richard.
My first call, yeah. Take it to the bank. Good to see you. Thank you very much. Now,